Hello traders and welcome to another video review. Today is Tuesday, December 13th, 2022. Let's find out what is going on the Forex calendar today. As you can see, the most important data releases are already on the screen. We got average earning index and bonus from the British pound scheduled for this at 8 o'clock, and as you can see, the actual reading is worse than expected. It's 6.1%, the forecast was 6.2%. It's still better than the previous reading of 6%. The Claimant counter data had been released as well. Those data are from the UK, of course. German ZEW economic sentiment data are very important for this economy and are scheduled for release at 11 a.m. Generally, the market participants expect improvement in economic sentiment from -36 to -26, so that's a nice jump here. We will see what the actual reading will be. At noon, Bank of England Governor Bailey will give a speech. Then we have the meeting minutes from the Brazilian Central Bank, and during the US session, we got core CPI data scheduled for release at 2:30. This is the most important data from the US for today. As you can see, the core CPI should stay at the level of 0.3%. So no big change is expected here. So those are the data for today. I guess we should take a look at the British pound and the euro dollar for sure. So let me just start with some charts. Euro dollar for our chart looks kind of good for the bulls. Nevertheless, let me just point out a few things here. The first thing I would like to point out is this short-term trend line here. So let me just make it bigger so you can see what I actually mean. This is the short-term trend line, and there is another trend line which is of course somewhere here. So that's the another trend line, and it looks like we have a triangle pattern in progress on the on the euro dollar. The local high was made at 1.0595, just below the 38% of the 50% of the Fibonacci retracement. Nevertheless, we are still stuck into this horizontal range between 1.0444 or 1.0595. So this is the range, and now we are forming a possible triangle pattern. So it looks like the momentum is positive, so the outlook supposed to be of course to the upside, because this is a trend continuation pattern. Nevertheless, the situation might be kind of different here, and what we might see in the nearest future on the euro dollar is that down movement. Okay, so why? Because this might be a falling wedge as well, and because this is in a very, very peculiar place, right? This triangle, this wedge pattern, after kind of a nice rebound from the yearly lows. So what I think is that this situation we might see some sort of the downside movement soon, just to make some sort of the correction. As you can see, the momentum, the market is making new highs, but the momentum is dropping lower. Let me just show you that here. You got the momentum going down and down and down, while the market is going up and up and up, which is why the outlook is skewed towards the bearish side of the trade. So British pound, what do we have here on the British pound? Very similar situation. As you know, the data was published. This is 4-hour chart. Very similar situation. Why? Because there is some sort of the line here. Okay, so we are approaching this line here in order to test it. So it looks like, and we got this here. So again, another very interesting pattern at the very highs of the recent rally. This is the, of course, this is the range that we are trading right now, 1.2106, 1.2343. So breakout lower is still possible here, and it might of course happen to this technical support very soon. In case of a breakout below this level, the other technical support is seen at the level of 1.1899. This is the low of the end of the November 2022. So again, if we zoom out, we can clearly see that this move to the upside is really limited. We got another bearish divergence here, so this is the biggest momentum that were made here, and since then we are just not doing that great, but the market keeps making the higher highs, so it looks like this multiple bearish divergence might soon be visible and much more clearer by the other market participants, and they might join the overall bearish movement. It might be just a correction. It doesn't mean that the trend is now changing. Nevertheless, the British pound to the American dollar had retraced almost 50% of the last wave down, big wave down, just as in case of the euro dollar. So very good level for the bears to get more active here. So British pound, this is how it looks, the situation on the British pound. And last but not least, let's just take a look at the S&P 500. What do we have here? This is, let me just switch to the daily time frame chart. This is a daily time frame chart on the S&P 500, and we are looking for any signs of a rebound and the uptrend continuation. So we got the low here. The market keeps trading higher, and if we place our recent swing high here, we can now clearly see that this recent swing high was made using a pin bar. Then we have the confirmation towards the basically the trend line, which might be even skewed a little bit here. We got this breakout to the downside, and now the market is trading in a limited range. Nevertheless, we still have the lows here covered by the bulls, right? 3,904 is the technical support. We need to definitely clearly break below this level in order to say that the S&P 500 rally from the end of the middle of the October is done with this pin bar, and now we are ready to retrace even more. Let me just show you where are the retracement levels. So this is the top, this is the bottom, and the retracement level is, for example, here 3,869, 3,799, or even 96, and 61% is at 3,725. We can still extend this movement to the downside, despite the fact that right now there is a very limited range, daily range on the S&P 500, but the down move doesn't look completed just yet. So this is my outlook for the current situation on the financial markets. British pound, euro dollar, S&P 500 analysis updated. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.